So earlier today, I received a phone call from my brother, who is typically very well balanced and well managed when it comes to his finances. And he asked a question. He said, how do I convert my mortgage from a capital repayment mortgage to an interest-only mortgage? Today, the Bank of England increased interest rates by 0.5%. The expectations in the market was for a 0.25% increase. And that is because inflation has been very, very sticky and very stubborn. We haven't really seen a lot of traction in the last few months as the central banks around the world, have tried to curb inflation. And this is precisely where a lot of people are. This is the reality of our world today. You may have heard a lot of people talking about wanting to either eliminate their debt or reduce their debt. Inflation continues to wreak havoc. Interest rates continue to rise. In the US at the moment, inflation is around 4.5%. In the UK, it's around 8.7%. In China, it's around 0.2%. And in the euro area, it's around 6.6%. So as you can see, compared to historical levels, we are faced with a very unique set of challenges. And central banks, of course, are faced with this huge challenge where they have to curb inflation. But historically, the monetary policies they would leverage don't seem to be quite getting the job done. When you see an uplift in interest rates, that's brilliant for savers. If you're a saver, congratulations, you're doing very well. If you're a borrower, on the other hand, which most people are, it becomes a really, really present and huge challenge. And one of the questions I'm getting at the moment, especially from clients, is it worth buying a property, for example, now? How do I manage my debt because I've got a floating rates facility, for example? That's a very tough question to answer. However, being someone who has worked through my finances over the years to become debt-free, I thought to share with you 5 practical steps that I took in order to get my finances in a healthy position, and what I did to keep a lid on my debt levels, eventually getting rid of my debt, and also to curb my spending. The only sort of debt I have at the moment is my mortgage, which of course I term good debt. Now you can have good debt or bad debt. Good debt is debt that really helps you elevate your life. It really helps you build assets and build your wealth over time, such as a mortgage. And on the other hand, you have bad debt, which is consumer debt, things you buy on your credit cards, things that don't necessarily hold value and are depreciating assets. And whatever form your debt takes, whether that's in form of a mortgage or perhaps student loans or your credit card, with interest rates ever increasing and staying high for quite a while to come, in my opinion, I think now is really a time to take a step back, to look at your finances and find out how you can make the most of the current situation. Now, the first thing I did in my mid-20s was to budget. Earlier in my 20s, I didn't really like the idea of budgeting because I felt it was very restrictive. However, I was able to do that because I had an acute sense of my outgoings versus my incomings or my earnings. And so having a budget is actually a building block and one of the critical points towards becoming financially free, and also understanding what sort of excesses you might have towards perhaps paying off your debt or investing. Now, I know for some people, budgeting is a dirty word, and for me, it was in my early 20s. But now that I'm older, I really see the benefits and the values that having a budget adds to your financial journey. Now, it doesn't have to be anything complicated. A simple budget will do. So the first step is to understand what your income is, what you earn, versus what your expenses are. The difference between the two would give you your excess income, which you can either use to pay off more debt or you can use towards investing. I would recommend to carry out this exercise over a period of a few months. That way you can really get a good grasp of what your expenses are on a monthly basis and how perhaps they fluctuate from month to month. And having this written down can go a long way in helping you cut out any excesses, things that you don't necessarily need. Part of being an adult and part of being on this financially lean journey is to really learn how to say no. That's my second point. Learning to say no. This might mean, unfortunately, for some of us, that there are certain people we can't have around us. I'm sure everyone has that friend who always says, oh, let's just go out this one time. Let's go shopping. Let's go to nice restaurants. Let's go to a club. Now, this can be very disconcerting when you have perhaps explained to that same individual that you're on a journey to really help your finances and there's certain things that you won't be available for. And some people just have those friends who are very, very persistent. Well, it might be time to take a break from that individual to get your finances in a better position. For some of of us, it might mean getting rid of some subscriptions. I cut off my subscription to my gym because I wasn't going to the gym, and now I go for free walks in the park. I cut off my cable, which here we call Sky or Sky TV, because the monies I was spending on these luxuries were better used elsewhere. So learning to say no to yourself can be very powerful in helping you get to where you want to be financially. Debt-free. The third thing I started to do a few years ago was to take out a secondary card whilst shopping or whilst out. I would put in just enough funds that I needed for a trip out. I would only have enough to cover my expenses and maybe a little bit of a margin for emergencies. And this went a long way in helping me not overspend and not impulse buy whilst out. So maybe having an online account or a separate account for spending where you can really manage the amount within that account and essentially have a budget where you don't go over it no matter how tempted you are, that really can be a massive game changer for your finances. The fourth thing I did was to be intentionally minimalist. So I call myself a budding financial and life minimalist. I am in the process of renovating my property. It's been a year, but it's coming to an end. And over that time, I've had to essentially pack up my belongings and unpack my belongings along the way. And what I found out was that I've got a staggering amount of stuff in my home. I found out that I only wear about 15 to 20% of the clothes I have. I have a massive wardrobe of clothes with their tags still on. Now, I am not proud of this, but that's my reality. And so whilst unpacking, it really hit me that I've got to really change my life. I have to make a change, firstly for my mental health, because I don't like a lot of clutter around me. Secondly, because this can actually help to improve my finances. I split all of my belongings into piles, and this took me weeks to do. One pile I kept as things that I would of course keep for myself and I would continue to use. The other pile consisted of things that had to be donated or perhaps sold. What I sold, I either donated to charity or I used towards different expenses. And now I have a clearer sense of what I have, what I own, and what I don't own. And having gone through that exercise, it really does help you as well mentally prepare for a financial purge. Being a financial minimalist is something I would highly recommend. But the final thing I would encourage you to do, or I would recommend that you think about doing, is to keep investing. I know that might sound a little bit of a contradiction because you're thinking, hang on, I need to get rid of my debt. How do I have enough finances to save? Well, here's the thing. The debt that you are essentially servicing at the moment could be what's standing between where you are now and the life you want to have. And don't forget that as you pay interest on your debt, your credit card debt, maybe student loan debt, even your mortgages, those interest payments are funds or capital that could potentially go within a portfolio that compounds on itself over time to build the wealth and the lifestyle you so desire. So investing, particularly equity market investing, falls into two broad categories. Growth investing, which is where you invest in companies that are positioned to grow rapidly over time, typically tech companies, and these companies tend to plow back any revenues they get back into operations to grow the business and scale it. They typically don't pay things like dividends. Now, the flip side of this is where I'm headed, which is the value side of investing. These are companies that are very mature. They tend to be blue chip companies, large companies that have stood the test of time, and they tend to pay out dividends. So I, for one, have my portfolio split between growth and value. From my value positions, I get dividends, I get coupons, but I also get special dividends every now and then. And so these returns could actually be used to service the debt and to hopefully pay down that debt over time. So investing can be a fantastic way for you to either reduce your debt or hopefully eliminate it. So if this video has been helpful and you aren't subscribed to my channel, go ahead and click that subscribe button. Also click the notification bell so you don't miss any of my new videos on investing, personal finance, wealth creation, as well as personal development. I'll see you in the next one. Bye for now.